Good morning this Monday, the 2nd of December. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed in record territory again on Friday to close out a very strong month of November for trading, with the Dow Jones rising 0.42% to a record 44,910.65 points. The S&P 500 added 0.56% to a record 6,032.38 points, and the Nasdaq ended the day up 0.83%. Chip stocks rallied on Friday on the reports that the Biden administration was considering additional barriers of sale of equipment in the semiconductor space to China, where that weren't as strong as previously expected. In Europe on Friday, markets closed mostly higher on the back of the latest eurozone inflation data out in the region, indicating a rise to 2.3% in November from 2% in October, which was above the ECB's target of 2% but in line with economists' expectations. The STOXX 600 rose 0.96% on Friday. Germany's DAX added 1.04%. The French CAC rose 0.78%, and in the UK, the FTSE 100 ended the day up 0.07%. Across the Asia region on Friday, markets closed in the red, mostly led by South Korea's Kospi index falling 1.95% following the release of key economic data out in the region. South Korea's Kospi index decline was due to industrial production in the region, growth in the region falling 0.3% in October compared to September, while Tokyo's inflation rate rose to 2.6%, up from 1.8% in October, which led the Nikkei to 4.4% on Friday. Hong Kong's Seng rose 0.2%, though, bucking the trend of the Red Sea across the market region on Friday, while China's CSI index ended the day up 1.14%. Locally on Friday, the ASX 200 closed out the last trading session for November 0.1% lower, as a broad sell-off led by REIT stocks offset a strong 0.82% rally for the materials sector. Despite the weakness on Friday, the key index posted two record closes in the final trading week of November. Select Harvest shares fell 5.4% on Friday, despite the almond producer reporting a return to profitability through posting NPAT of $1.5 million, which was a significant turnaround from the $114.7 million net loss posted in FY23. And in battle, casino operator Star Entertainment hit a record low share price on Friday of 18 cents per share following a rating downgrade from Macquarie. The broker downgraded Star to an underperform rating after the company reported an earnings loss of $27 million in the first 4 months of the new financial year. Ahead of Monday's trading session here in Australia, the SPI futures are expecting the ASX to open the first trading day of December up 0.25% on the back of Wall Street's record close on Friday, and ahead of learning how strong the Black Friday sales were on Friday just gone. On the commodities front this morning, oil is trading 0.43% lower at $68.63 a barrel. Gold is up 0.72% at $2,657 an ounce, and iron ore is up 0.26% at $102.44 a tonne. The Aussie dollar has weakened by 65.11 US cents, 97.58 Japanese yen, 51.16 British pence, and 1 New Zealand dollar and 10 cents. And now let's dive into some trading ideas for your consideration this Monday. Bell Potter has downgraded the rating on QBE Insurance from a buy to a hold and have raised the 12-month price target on the insurance group from $19.05 to $19.20 following the release of a Q3 trading update, including gross written premiums up just 2%, premium rate increases across the group reduced from over 8% a year ago to just 4.9% at Q3, and full-year guidance unchanged. The reason for the downgrade to a hold is the benign Q3 update against shares performing well over the recent period. And Trading Central has identified a bullish signal on Maya following the formation of a pattern over a period of 23 days, which is roughly the same amount of time the share price may rise from the close of $1.06 to the range of $1.20 to $1.24, according to standard principles of technical analysis. And that's all we have time for this Monday morning. Have a wonderful day and happy investing.